Cambridge House Live. I'm Vanessa Collette here at the Cantech Toronto conference, and I'm pleased to be joined by Jeff Booth. He's the founder and CEO of Build Direct, which is an online platform for home building supplies. Jeff, great to have you on the show.
Thank you very much. Great to be here.
Now, Jeff, you recently secured, I think it was $50 million in funding. What does that do exactly for Build Direct?
We're using the money to build out the platform, the technology platform, to enable us to move faster. Effectively, today in the business, it's slower to add products to the site, and we feel like by putting that power in our manufacturers' hands and empowering them to put the products on, it moves more products, which in turn helps more buyers find the products faster. So reducing the marginal cost to add products would be the main thrust of the financing.
And it'll be a scaling initiative.
Exactly,
basically.
and effectively that allows scale to happen.
Now, I think I read that at one point you mortgaged your house in the process to keep Build Direct alive, and you founded the company in 1999. So what was the story there?
We actually sold the house to keep Build Direct alive, and put all of the money into the business.
It's amazing.
You don't do that haphazardly. You don't do that unless you're sure you're right. You're sure there's a way to. That's a family decision, and so there were some conversations at home about that family decision, but we believed in the journey. We believed we could do it.
Right, and obviously the company's come a long way since then. Now, Jeff, you recently secured $50 million in financing. What will that do for the company?
It'll allow us to build out the technology platform, and effectively what that means, or probably the most important thing on that technology platform is allowing giving the power to the manufacturers to embed on our system faster. What that allows is effectively reducing the marginal cost to add supply to the site, which in turn makes it easier for buyers to buy more products on our site.
So suppliers can create their own stores on the site? Is that how it works?
I wouldn't say it's as much own stores, but what we are is a platform that gives advanced analytics to manufacturers to let them see what products are going to win and where to put them. And this takes us out of the equation. It takes us having to do that work for the manufacturers out of the equation, which enables us to move a lot faster when the manufacturers are building to the system and the analytics.
Interesting. Now, you founded the company in 1999, so you really were a first mover in the space.
Yeah. When you think about what technology or e-commerce looked like in '99, it was a different world in '99.
Right.
Most of the companies from '99 aren't around today. So yeah, we were a first mover, especially in '99. It might have been hard to sell a book online.
Right.
People think that we've been delivering products that weigh 2,000 pounds to people's houses. So we had to invent an entire logistics channel to do that and everything else. We were ahead of our time in '99. That's true.
Right. And I think I was reading that at one point you sold your house in order to finance the company. So what was the story there?
Yeah, one thing about being ahead of your time, being early and being wrong looks very similar.
Right.
And we knew we were right. We could see in the data, we could see that this was working. Mm-hmm. But there was a time, and this is in 2008, 2009, that the world was different. That you couldn't raise money to be able to extend that. So I had to take a gamble, and when I say I had to take a gamble, my family had to take a gamble, and we just believed that we believed in it.
Absolutely. Now, you just secured $50 million, so clearly financing is a little bit easier now. How have you changed your approach to financings?
I don't know if I have. I think as the business performs and reaches milestones, more and more people get excited about where that kind of exponential trend takes us, and more investment is looking at our company as an opportunity to deploy into technology. Mm-hmm. So I don't know necessarily that I have. I've always looked at creating a platform. When I think about Build Direct, I think what we stand for is opening a world of possibilities. And what most platforms do today is they empower both sides. So the power it comes out of the control point, who used to have the power, and is broadly distributed to the consumers and the manufacturers. So that's what we've always thought about doing. As it's having more and more success, more and more people are seeing that success and wanting to come in.
Yeah, I mean, customers are very powerful these days. Yeah.
Customers are in complete control, and you need and building systems to give that control to the customer is really what we're here about.
Well, I think I was reading in the Everything store, that Jeff Bezos story, about how in meetings he would have an empty chair to represent the customer, and it sounds like you guys have a similar philosophy to that.
Similar philosophy. Now it's now there is the other side of it. The other side of it is the manufacturers all over the world see actually that same chaos through the distribution channel, because who controls the distribution channel? Those manufacturers are fighting to get in limited distribution channels.
Okay.
And if you open up that power to the manufacturers as well, you're able to marry those up, and the winners choose themselves. The winners that effectively, the best manufacturers and the customers see more choice,
right.
and the best manufacturers win out of that.
Absolutely. Now, what advice would you give to startups on raising money and finding financing?
That depends on where you are in the startup journey. When we started, the capital markets weren't as mature as they are today.
Well, when you started, I mean, wasn't that very close to the dot-com bubble?
Dot-com bubble, and then crash. We started right at the end of the dot-com bubble.
Wow.
And so there was a time before we started where you could raise money on the back of a napkin. Less so in Canada, but more in the U.S. Then after that, it was very difficult.
Very low appetite for anything
risk, because it looked like it was all over. We raised money from friends and family primarily first, and then that expanded bigger and bigger and bigger as more people saw what we were doing.
And did you go the VC route at any point?
Our first real institutional capital was Omer's in Omer's Venture, and again, it was as the business was maturing. More people were taking notice, so that's when we went to institutional capital.
Now, the company currently isn't profitable. Is that correct?
That's right.
How much of a concern is that for you? I mean, you see people talk about, Amazon, Alibaba, the differences there. So fundamentally, Alibaba and Amazon, at least Alibaba as we know Alibaba, it's almost the Wild West, right? Every product's listed there, right?
And they make high margin because it's a listing service. Mm-hmm. That's one end of the spectrum. On the other end of the spectrum, you have real high quality and trust for buyers.
Right.
Amazon is probably closer. They have aspects of Alibaba, and they're probably closer to the other end of the spectrum, trust and buyers, at least what some other products are. And where you play in that spectrum, I think matters a lot. Because if it's Wild West, so Amazon, anybody who thinks Amazon couldn't make money is delusional.
Right.
Their free cash flow is incredible. Now, they're choosing to reinvest that free cash flow, and the market's letting them reinvest that free cash flow in new and upcoming innovations, is a testament to they believe Jeff Bezos' vision that he'll be able to use that capital better than they will.
Right.
That might change. Some of those investments will not pay off. Some of those, but some of Amazon's core business is extremely profitable, and they're building it bigger. I think the larger question there on that is, what happens to some of their core businesses when companies like us go after those businesses?
Right.
Because
it is the everything store.
This pattern is the history doesn't repeat itself, but it often rhymes.
Right.
Walmart was the everything store, right? Did it really well for years. It didn't stop the big boxes and Home Depot and Lowe's from coming in and doing not everything better, but a specific
Right.
segment better.
So where does Build Direct fall on that spectrum?
I think we focus today on heavy goods and building products because that focus allows us to get deeper and offer more value to our buyers in that more value to both our manufacturers and our buyers. And then we move from there out category after category. So we look at it at a different place. I believe in Amazon's numbers, 95%, 96% of their product sales are under £5.
Right.
We would be exactly the opposite.
Opposite,
Our products are about £2,000 delivered. So the supply chain that you would build for our channel versus Amazon's channel are very different.
So what would you say to investors who look at the company and ask you when it would be profitable?
I'll say this, very few investors look at that. The right investors are looking at our free cash flow numbers and the deeper metrics that drive it because they know.
And your consumer base and
lifetime value economics, what the cost per acquisition is, what the fundamental platform changes. So I'd say the right investors are more focused on scaling this to be a big company.
Absolutely. Well, Jeff, thank you so much for joining us today. It was a pleasure having you on.
Thank you very much.